everyone, my name is Justin Lake from Think Numbers. Today we're actually going to go over a question which is actually going to require us to actually recalculate our retained earnings accounts within our balance sheets. So let's go quickly through the question and understand what the information is about. Screen Clean Company provide the following very limited set of data. Use this information to determine net income for the years ended 31st of December, 20x6, 20x7, 20x8 and 20x9. The company was formed at the beginning of January 20x6 by issuing $350,000 of capital stock, and no additional shares were issued during the 4-year period. The company's 2020 X9 dividends were equal to 50% of the 20x net income. Alright, and then there's a bunch of financial information below. So how would you actually even approach a question like this? Okay, so how would you actually approach a question like this? Well, I think the first thing to actually consider is actually to, first of all, let's look at the opening. It's all about retained earnings, right? Because within retained earnings, you actually have your opening balance. You have to add your profit or net income. You less your dividends. Less dividends. And then you have a closing balance. So that's the theory behind it. So let's actually now apply this to this formula. So in 20x6, our opening balance would have been 0. Had to have been 0 because we started the business. There was no profit yet in the business. Do we know the net income for 20x6? Well, there's not really a great deal of information here that tells us much about 20x6, and we do know that they paid out a dividend because they've said here that there's been dividends of 35. Alright, so we're going to deduct the 35 off the retained earnings. And then we also know that there's a closing balance because it's at the end of the year for 143. So that's a closing balance of 143.5. So what you actually probably would then do is then you just got to work it backwards to actually work out what the profit's going to be. So, well, we'll call it the net income to be precise. So really, you take the 143.5, and to get back to our net income, we've got to add back the dividend because that's the closing balance, and then we're going to get back to the net income. So the net income is 178.5 if you work that out, and this is for 20x6. If we then go to 20x7, we have an opening balance based on the prior year, which is last year's closing balance of 143.5. Our net income for the year for 20x7, let's have a look at some information we've got here. Now we have revenues for 20x7 of 315,000. We also have expenses of $154,000, and so you could actually work out that profit because net income is revenue minus expense. And so what you could actually do is you could have the 315 minus the 154. So 315 minus 154 equals 161. So that's the net income. The dividends, let's work out what that could be. Now, do we know what the dividends are for 20x7? There's no information there, to be honest, that actually tells us what the dividends are. But we do know the retained earnings closing balance is going to be for 20x7 $280,000. Now, if we wanted to work that backwards, we could actually work out what the dividend's going to be. 143.5 plus 161. And then the difference between that figure and 280,000, which is the closing balance, is 24.5. Not that the question is asking us that, but just for your information. So how do you work out that dividend? Now for 20x8, we have an opening balance of last year's closing balance of $280,000. We need to work out our net income and any dividends. less any dividends to get our closing balance. Let's have a look and see what information we've got for 20x8. Alright, so we've got dividends of 52, which is going to decrease off our retained earnings. We have total equity, but that would include also share capital as well. And we've also got liabilities of $770,000. And so how are we actually going to work that out? So now we don't have any closing balance, do we, for 20x? Now this is the way I would do it. So if you've got an equity balance of $735,000, we know that originally, when we actually formed the company, we had $350,000 of capital, and so then no additional shares have been issued. So really, what I would do is you've got to take the equity of 735, and you've got to take off the original capital, because the only difference is going to be retained earnings. So 735 minus 350 is 385. And what that amount is going to be, that's actually our closing balance. 385. So to work it backwards, work out the net income amount, you've just got to work from the bottom, so 385, and you add back the dividend of 52.5. And so the net income for this year is actually going to be 437.5. Okay, so finally, then for 20x9, our opening balance will be 385,000. Our net income, we'll work that out, less dividends, and then a closing balance. Let's see what information we've got here. So for 20x9, all we have is total assets. We have increase in liabilities. So they've actually given us very little information, and that there's a dividend, 50% of the net income will be the dividend. So all we've really got to work with here is closing information. This is the way I would approach it. We have total assets. If we use the accounting equation, assets equals liabilities plus owner's equity, we have $1.7 million. So $75 million. Liabilities, so if we look at what was last year's liabilities, it's actually $770,000 for last year, and there's been a $175,000 increase during the year. So liabilities is actually $945,000. And then owner's equity will be a combination of our original issue of stock, $350,000, and the difference will be the net income. Because owner's equity is always made up of capital plus your net income. So the way you could do this is you could then just work this out through moving everything to the other side of the equation by saying 1.75 million less 945,000 less 350,000. So net income. So let's work this out. So you go 1750, work with me here, minus $945,000 and minus 350,000. So we've actually got 455,000. And so just to finalize this, 455,000, we've actually got a dividend which is 50%. So it's going to be a dividend of 227.5, and then to work out the closing balance, you have 385 plus 455 minus 227.5 is 612.5. So, I mean, really the question was about working out the net income, which we did, in which case we've worked out the net income for 20x6, 20x7, 20x8, and 20x9, and you can see that every year there was a slightly different method of how we actually worked out that net income. I hope you've enjoyed this lecture today, and please don't forget to subscribe to my channel.